Hey guys, good morning. This is Chibuzo from Trade Correct, and this is pre-session analysis for Euro USD. Today is the 30th of August. We have one more day left in this month, and like I said on Sunday, our weekly chart is bullish, internal structure. Obviously, we know our monthly chart is bearish. We've been on that for a very long time. And what do we see on the daily chart? The daily chart mitigated a demand here, right here, and it is not bad to anticipate a new daily higher high. That's what structure is saying. That's basically what to anticipate in a bullish market structure. And I said I will look for buys only if my 4-hour chart switches to bullish, and it did that yesterday. I think New York session. Yep. And so you remember on Sunday when we spoke about these charts, we said we're looking for sales between this range. We're looking for sales within this range, you know, and until this high fails, this supply here fails, we'll still be looking for sales. And woke up this morning and saw that the high has failed yesterday. Because of the bullish pressure, I understood that okay, the market structure is probably going to switch bullish, and so I didn't take any sales, and I didn't get any confirmation after the sweep of liquidity too. All right, so this here was our internal break of structure. That is our break of structure within a price range, and this is our break of structure BOS. That's our break of structure, external break of structure outside of the price range, whatever you want to call it. All right, so I'll be looking to take buys from this demand here. Why? Because it meets my rule, and what are my rules? Simply, demand has or a point or a key level has to sweep liquidity. It has to break structure, and in this example, it broke internal structure and external structure. It doesn't possess inducements, but it doesn't possess inducement. So how will I engage it? Simple. When I see a zone that doesn't possess inducement, it just has imbalance, or you know, what I'll do is I'll take it with confirmation because this low can fail. If a low doesn't have inducement, that means if it doesn't have liquidity to cause price to reverse when price encounters it, price can use this whole level as liquidity then reverse. So I wait for confirmation here. That's a lower time frame to show me a reversal pattern, then I will take it. But the purpose of this video this morning is not just to talk about Euro USD and this trade call. It's to talk about something that is a bit confusing for a lot of people, but I want to talk about order flow. And order flow, like the name implies, is the flow of orders in the charts. And I remember I told you that when you see a consolidation at the beginning or the end of a trend, you should be patient and wait for the market to show you what it wants to do. And so we had this consolidation here. Price broke up and broke down and began to sell. And a consolidation that leads to a downtrend is called a distribution, and a consolidation that leads to an uptrend is called accumulation. So this is a distribution phase. The market pushed up, manipulated these highs, induced early buyers or early sellers that had their stop losses just there, and the market sold. And I want to talk about order flow because order flow is something that really helped me in my trading. It keeps me away from unnecessary losses, and it has really helped. I already have my order flow marked out here, but I'll mark it out again, and I'm trying to make this video very short as possible. All right, so let's see. What is order flow? It's simply it has a similitude to structure, but it's a bit simpler. So this is it. You want to identify the prevailing momentum in the market, so you know if you should be taking buys or taking sells within a price range. So price broke structure here on the 4-hour internal structure, had a pullback, mitigated this POI here. Let me just mark it out. It mitigated this POI, H4, okay, and it broke down. Now this is a bearish market structure, so that's the bearish order flow. Now from this point to this point, our order flow remained bearish and order flow switched to bullish. Now you're asking yourself, why did it switch to bullish? It's simple. Within this high and within this low is a price range, and price moves like a wave, and price will always have pullbacks after moving. So we had this price range. This is my Fibonacci, and this is the 50% of the point. So at a point, price will pull back, to a certain key level within that price range to continue the prevailing move. In this point, it is bearish, so it is selling. So the order flow shifted to bullish, or became bullish, because he wanted to facilitate the pullback. And when it was done, it fell. So when you wake up in the morning and you see bullish order flow, but the market is actually selling, you should understand that, okay, this is a pullback phase. Do I want to trade the pullback phase, or do I want to wait for the continuation phase? This way you have lesser trades and you are on the side of the market more often, which tends to profitability. And at this point, the market sold, bearish order flow. And let me take this a little bit, and this here. Yeah, and after the continuation of the trend, had a pullback. All right, so bullish order flow, very little one. It had this pullback here, and what happens after the pullback? The market sold again. So this is what happened. Now, obviously, we can see that this is a price range within here and here. But how do you know it's a price range? It means the order flow has to remain within certain price parameters. So within a price high or a price low for you to say the price is ranging. So the price at this point was 1.10475, and the price within this low was 1.09122. So when the order flow remains within that price range, you know that price is ranging. All right, so, or consolidation. So here we had a bearish order flow, we had a pullback, bullish order flow. You can see that the bullish order flow did not exceed the bearish order flow. So if you woke up in the morning and you saw this thing, you are aware that we are still in a bearish market. Now you see this happen. Now you can see that the market is showing clear signs that, oh, it's going nowhere, it's just ranging. Now the market now broke above this guy here. Now, do you see the order flow is bullish, or do you see the market structure has shifted to buys? Remember, our structure rule says that a proper break of structure has to be a body break. I mean, price has to break it and close above it. But here is just a weak break, so it's a liquidity sweep. Knowing that, even though order flow tells you that price is bullish, because of your structure rules, you know that, oh, this is just a sweep of liquidity, and price switches back to bearish. Now at this point, now you know price is bearish and you are engaging it appropriately. And let's try to run this through, and so on and so forth. That's how you go through your price range using order flow. I need to try to make this video 10 minutes, so I'll clean all this off and put on my order flow here. All right, so you can clearly see that, let me take this off too. Okay, you can clearly see that price pushed up, pushed down, we remain bearish, pushed up. Why is it pushing up? It's facilitating the pullback within this price range. Push down again, remain bearish. Price pushed up, another pullback, push down, remain bearish. And what the price do finally? Price pushed up, broke this high. It didn't just break the high, it closed above it. As you can see this is a body close and not a weak close. So now that tells you that the order flow is now bullish. And it's not just that it's now bullish. You can see from the daily chart that it is engineered because, or is caused because price mitigated a demand right here. So you have that insight, you know that already. So now you are looking for buys. So where are you looking for buys? Simply, you have key levels you pick from where you're looking for buys, and for me it will have to be this place. And if price buys without coming down here, I won't be surprised. I'll just understand that, okay, price flipped this supply up here, which is totally fine, and I'll have to find another way to engage the market. Probably this London session or New York session. Alright, so order flow now is bullish. I will expect order flow to switch bearish. Why? To facilitate the pullback. And when the pullback is over, I will expect order flow to what? Remain bullish. Because I've already seen the break of structure to the upside. So these are one of the things that you know in the markets, and you trade less, you have better trades, more wins than losses, and it keeps you profitable. Alright guys, check this out on any pair, check it out on whichever time frame you want to check it out on, and use it as you please. Share with your friends to make trading easier for everyone. Have a wonderful trading day. Peace.